So let me do that again. All right, so I'm going to record this one. So what we're looking at here is a way to do turbo on the blended monthly rebalancing. And my thought is that to treat it something like a portfolio horse race is my idea. And so what I have here is, instead of just taking a look at a snapshot, and let's just say, on what I mean by that is, in the BMR strategy, all you have to do is on the day of decision, say the 0 day, you just come in and then you consult the list of the best to the worst in the BMR, and then you take the top 3, and then if they're allowed to be owned, then you just put your money on those. And so on day minus 30, if it was the previous time that we'd have done that, we go back and we'd have owned the top 3, and then there was a decision point 2 months ago, and then a single decision point 3 months ago. So each of those days is a thin slice of performance of that particular portfolio that you're using, whether that is ETF 32 or 22 or 13 or some variation of that. And so my sense is that if we put together some kind of time series and we could track the performance of these rascals through time, that we might be able to, with very little processing required, take a look at some time frames or some trend lines and time series and see how this thing is shaping up to do a couple things. First, we would keep the portfolio weighting of the performance at the same current blended percentage, 70%. Oh, I got that backwards. 70% of the 3 month and 30% of the 6 month. Sorry about that. Got that backwards. Let me fix that right now. Man, how could I get that so wrong? Sorry, that should read 30% of the 3 month. 30% of the 6 month and 70% of the 3 month. So I'll fix that in the next sketch. So my sense is that in this time space between the monthly performance numbers, you actually have some kind of a countdown to decision making, and that you might be able to see, as whatever the current regime is, you could see who the winners are, and these are going to be the next candidates to own if that were the day of the decision. So as you get closer and closer to the BMR, you can already see which ones you're going to own. And it may be that you want to maybe catch them sooner if there's some chart patterns or swing patterns that make them interesting. That could work. At the same time, one of the things we do is evaluate all of them according to some daily snapshot. And let's say that in the ETF 32 portfolio, if we were using that, we could find the best performer in the 32, the worst performer. We could find the standard deviation in the average, and then we'd have something like this stem and leaf plot here, which shows that the 2/3 of them clustered around the average, and then the really exceptional ones up in here, and the real laggards are down in there. And so Kieran's idea was that maybe there's something we could do, that if the current winner had some kind of position like this, that there was a lot of improvement in his performance all the way up this chart, all the way up that scale as he was advancing through the pack, and that maybe there's something that we could do, that after something makes a turn, maybe somewhere in here there's a way to get into this with advantage, and then continue to ride the BMR train once it formally becomes an ownable symbol. So as I was thinking my way through that, it looked to me like what we were talking about was an opportunity to find swing trades that occur inside the waves of these BMR tides. And so my view is that the BMR finds patterns that can last for weeks and months and quarters. And so as you get something like an ocean tide of waves, maybe there's something that we can do to put that information to work for us and look in the swing trade time frame, which looks like a nice trade-off between the frantic activity of the daily trade and maybe the too slow periodic once a month trade. And so my original thought was, well, if we just used the ETF 32 as sort of a model for that, what we want to do is I want to come up with some kind of structure. Yeah, Martin, I do. It tends to vary depending on how trending the market is. There are times when the market has a very long quarters and years worth of positive trending, like 2005 to 2008, when the leaders stayed in those positions for more than a year. And then there have been some other ones when the market gets really choppy month to month, and they swap out very regularly. And so I'm almost reluctant to say that there is a normal period of ownership. I can tell you what the average one is, but that's less useful than recognizing how the state of the market itself shapes the expectations of how long these things will stay in trend. The bottom line is that when there's any kind of trending in the market, you can expect those to be in position for, 3-4 months minimum. And what that suggests is that there's some opportunities in there with swing trading to really start piling on winners when they're part of that big long trend using markets money, or there's also a way to get into them a little earlier and with tighter stops and a little more attention, maybe build a cushion for those times when the market gets choppier. So that's what we're hoping to sort out. So as I'm thinking of what this graphic might look like, I was considering, well, I could use the actual blended performance. I was also thinking of doing maybe a z-score to normalize of that BMR percentage, with the idea being that if this was the average performance at z equals 0, and you had +1, +2, +3, that if something had moved from below average up to above average and started to peak and roll over at more than 2 standard deviations above its average, then that might be an early warning that, hey, you're in the warning zone, it's showing evidence of overheating. That might be a time to lock in some profits on a BMR position. And by the same token, if something had fallen to an extremely low level, a surprisingly low, I don't think Brazil is going to disappear overnight, that there might be something like a Z trade pattern available in there, or you could start a program of buying on the way up, because it's probably not till it gets up into this location that it becomes a clear BMR favorite. So there's this whole stealth trade region in here where we might be able to start rewarding earlier signs of strength. So we wanted to look at a couple different angles on that. And note that a chart that looks like this, whether this is expressed in terms of actual performance numbers or on as normalized for Z, then you could still use that as for individual charts. You could look at the individual path through time, but then you could also put multiple lines on there so you get this idea of something like a horse race, and you can see what the ranked order of these guys would be. Okay. All right, so far so good on that? So the idea underlying this, and I wanted to down here what I call or what I've represented as the land of beliefs and assumptions. My sense is that what I think you have to believe is that for this to work, is that there's something like deep and powerful market processes deep in the ocean that are generating waves of price energy from the depths and are moving towards the surface where they become these waves. But there's a deep energy in there propelled by something that can move an ocean, large caps. And that these waves of price energy act on different targets in different strengths to produce variable returns, and that these have persistence and momentum that look like ocean waves that roll longer than individual stocks do. And my belief is that we can't really know or fully know what these sources of power are. They may be subconscious. They may be just reacting to algorithms And but what we can do is we can feel the effects as they are manifested in differentiated price action. That whatever it is that's causing these things to move, like maybe last year it was all SPY was better than the globals. Right now it's the globals are better than the SPY. So these deep and powerful forces are shifting their attention between targets for reasons that we can't fully know and probably don't need to fully know. Probably I said, even if we could know them, I don't know that we need to know them. And that if we have something that gave us something like an average and then these regions of oscillation, that there might be these kinds of locations at turning points that tell us when the truth has just changed enough that it's time to start looking up or be ready for the downward move. And alert, it's already moved a considerable distance, and then it flattens out and then starts moving up. There's some opportunities in here around the mean. So when we have things that move in these long ocean wave kinds of swells, then something that can pick up that kind of price action might be useful in supplementing and leveraging the BMR timeframes. I just want to go back a quick second. And so some things that I was considering for what to score against, you can see two of them here. One of them was just using the actual blended performance and then possibly a Z-score of that. I'm also thinking about, so that's the Z-score of BMR percentage. I'm also the slope statistic of each of their 30-period regression lines compared to the S&P. If you subtract the S&P's slope stat from the indexes, you get the alpha stat. So alpha stat is a way that this might be arrayed. It could also be a time series on the ETF2 strength rating. That's pretty close to the BMR anyway, and so I wanted to start just building a prototype with the easiest one to explain, or the one that's the closest to the BMR, so it doesn't take a new set of beliefs to believe in it. And so now I want to prepare a spreadsheet that could be robust for us. And so I'll just do a quickie on spreadsheet design. So really what I'm constructing conceptually, and I'll have this turned into a spreadsheet here later this week, is first I want to have some kind of master performance sheet that shows the blended performances, and so for all of these symbols in here, in this stack of symbols, whatever that may be, in here would be reflected the computed blended performance, which is right now it's 70% of the 3-month return, 30% of the 6-month return computed and into this blended number. And then from that database of time going from, say, day minus 120 to the current day, we could then see the time series of those line charts expressed in a set of graphic displays for different subsets of the of that total stack. So we might have the Dow 30 in here, we might have the ETF 13 and 22 and 33, and then the S&P, whatever, all the different populations of symbols. And so what I'll do now is to allow people to configure their own, is I want to make sure that this is robust enough that there's plenty of different symbol sets in there. So I will probably have different groups of symbols, 1, 2, 3, 4, 5, and 6, whatever that may be. And then on one sheet that has the different symbol sets along with the weights, and then that will push those symbols over to the computed areas where there's a spreadsheet that uses XLQ to do daily computations of the 1-week percentage that goes back 120 days. So it goes from day minus 120 to day 0. And then a separate tab that receives the symbols from this sheet and computes just the 1 month, and then just the 3 months, and then just the 6 month. And then this one pulls those numbers together, which is performances times the weights, to come up with the computed values, which will then show the graphic measures. If I wanted to do the Z-score design, I then have to do statistics on there. It adds it doubles the complexity because now I still have to compute all the time period performances, but then I have to add a Z-score module to each one of these tabs that for each symbol finds its maximum, its minimum, its average, its standard deviation, and then from that computes a second set of tabs that does the Z-score for the 1 week, 1 month, 3 month, and then 6 month, and then those build into a chart that can drive the graphic displays. So what I'm going to start with is just, since I have to build this one first anyway, and that was the origin of the idea, I will be building the this week the BMR performance, and it will track about 120 days worth of time series. My just doing some brute force math on the size of spreadsheets, that we can probably get about 500 symbols in there, and then compute all these different numbers and still have a reasonably sized and reasonably fast spreadsheet. But what that'll let us do is, by putting the standard symbol sets in there, you should be able to find things that you want. And I will build in some room for people that want to add 20 or 30 symbols of their own into a special group. And you can filter, you'll be able to filter just on that. So it'll be like group 7 or something will be the ones you identify that you want to study. And then you could filter just to see group 7, their computed performance, and maybe a graphic on that set. So this is the conceptual design of the spreadsheet that's designed to meet my needs and maybe all of our needs, knowing what kind of things you guys like. And then once I have this sort of conceptual blueprint finished, I can turn this into a spreadsheet pretty quickly, and then I'll get a prototype out into the chat room sometime this week. All right, so that's everything I wanted to cover. The symbols that I'm looking at for swing trades that I'm going to post some charts on later. The two energy stocks there, that Marathon Oil and Valero, Brazil, the consumer discretionary, Walmart, IBM, Intel, emerging markets, Juniper Networks, all those things that I talked about before. My sense is that even if we just stick with our usual suspects, there's going to be some good swing trade opportunities coming up this week, is my sense. We're either going to get a breakout to new territory up, or it's going to be a reversion back to the mean, which will allow some combination of profit taking and some intraday trading. All right, so that's everything I wanted to cover. We're getting close to taking a break time. The next one starts in 5 minutes for the folks going to, we're coming to Kansas City, so I need to get set for them. I'll have this stuff posted in the chat room. These sketches, and then the link to the executive summary is already posted in the chat room, so we'll see you in there tomorrow. Keep your wrist measured and your powder dry.